Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 28th of July. Let's dive into the week's top market news. European markets advance on trade optimism as ECB adopts hawkish stance. European stock markets posted gains last week, with the Pan-European Stocks Europe 600 index rising 0.54% in local currency terms. Market sentiment was supported by tentative optimism surrounding a potential trade deal between the European Union and the United States, although the EU has indicated it could respond with counter-tariffs if an agreement is not reached. Among the continent's major markets, Italy's FTSE MIB saw a significant gain of 1.03% and the UK's FTSE 100 index rose 1.43%. France's CAC 40 index recorded a modest gain, while Germany's DAX declined by 0.30%. The European Central Bank ECB held its key interest rate, the deposit facility rate, unchanged at 2% during its meeting on July 24th. This decision to pause after 8 consecutive cuts since June 2024 was widely anticipated by a market that noted Eurozone inflation is currently at the ECB's 2% medium-term target. In the central bank's assessment, the economy is performing in line with or better than expectations, though the global environment remains exceptionally uncertain, particularly due to ongoing trade disputes. ECB President Christine Lagarde stated that the central bank is in a wait-and-watch situation, citing the uncertainty created by trade and tariffs. Her comments suggesting the bank would not be swayed by small deviations from its inflation target were widely seen as hawkish, which in turn helped underpin the euro's gains against the US dollar. On the economic data front, Eurozone business activity grew at an increased rate in July, with the HCOB Flash Eurozone Composite PMI Output Index rising to 51.0 from 50.6 in June, reflecting modest output increases in both the services and manufacturing sectors. Business confidence in Germany strengthened, while it deteriorated among French firms. In the United Kingdom, economic data continues to soften. According to the Office for National Statistics, UK retail sales increased by 0.9% month-on-month in June, which was short of the 1.2% consensus expectation but represented a recovery from the 2.8% fall in May. Furthermore, the preliminary UK composite PMI from S&P Global fell to 51.0 in July from 52.0 in June. While the manufacturing PMI improved, the services PMI saw a slight decline. Evidence of a weakening labor market emerged from a significant downturn in the employment balance, with the private sector weighed down by the government's decision to increase staff social security contributions and the impact of higher trade tariffs. Now our insight into alternative markets. Italy's delisting trend, weighing the pros and cons of going private in 2025. In recent years, the phenomenon of delisting, the process of a company removing its shares from a stock exchange, has become a central theme in the Italian financial landscape. In 2025, this trend continues to shape Piazza Affari, with significant implications for companies, investors, and the economic system as a whole. This article analyzes the phenomenon with recent data, explores the underlying causes of delisting operations, and evaluates the advantages and disadvantages of becoming a private company, with a focus on the Italian market. The Italian stock market has seen a steady decline in the number of listed companies over the last 2 decades. According to data from Borsa Italiana, There were over 290 companies listed on the Mercato Telematico Azionario MTA in 2010, while in 2022 the number had fallen to 230. The phenomenon intensified in 2024, with 37 companies leaving Piazza Affari compared to only 21 new initial public offerings IPOs, resulting in a market capitalization loss of approximately €28 billion. The trend shows no signs of slowing in 2025. New delistings were recorded in the first half of January, while only 2 companies were listed on Euronext Growth Milan EGM, the segment dedicated to innovative SMEs. Notable cases in 2024, such as the delistings of CNH Industrial, Ceres, OpenJobMetis, and YuxNet Porter, highlight that these exits are often linked to extraordinary operations like tender offers or mergers and acquisitions (M&A). A long-term analysis by Intermonte and the Polytechnic University of Milan shows that from 2002 to 2021, delistings 336 were only slightly fewer than IPOs 448. Key motivations for this exodus include the perceived undervaluation of Italian stocks compared to competitors on foreign exchanges like London or New York, the significant costs associated with listing compliance and transparency, and the macroeconomic context of competition with more flexible international markets. Exiting the stock market and returning to private management offers several benefits. A primary advantage is the ability to eliminate the discount to net asset value (NAV) that often affects listed holding companies. Furthermore, private companies gain greater strategic flexibility, as they are not subject to the pressure of public shareholders for short-term results, allowing for more effective long-term planning and investment in growth projects. Delisting also leads to a significant reduction in costs related to listing requirements, such as compliance, investor relations, and auditing, freeing up resources for other strategic priorities. Operating as a private entity provides protection from market speculation and potential hostile takeovers, offering more control to core shareholders. Finally, in the case of a merger or acquisition, delisting allows the new owners to restructure the company without the transparency obligations imposed by a public listing. Despite the advantages, going private also entails risks and limitations. The most significant drawback is the loss of access to capital markets, as private companies cannot raise funds through public equity or bond issues, which can limit financing opportunities, especially in a high-interest rate environment. For shareholders, delisting results in reduced liquidity, as shares are no longer tradable on regulated markets but only on over-the-counter OTC circuits, which are characterized by low volume and wider bid-offer spreads. The delisting operation itself can be costly, particularly if the tender offer price must reflect the full NAV. Moreover, private companies have reduced transparency requirements, which can diminish investor confidence. This can also lead to conflicts with minority shareholders if the offered price in a tender offer is not deemed adequate, although Italian law protects them through mechanisms like sell-out and squeeze-out rights. The continuous delisting from Piazza Affari has raised concerns about the loss of capitalization and the reduction of investment opportunities, with daily trading volume dropping to €2.27 billion in 2023 from €6.2 billion in 2007. However, 2025 could mark a turning point. Initiatives such as the DDL Capitali law, approved in 2024, and a new fund from Cassa Depositi e Prestiti CDP aim to incentivize listings through tax discounts and support for SMEs. Nevertheless, the delisting phenomenon remains a structural challenge. In conclusion, becoming a private company offers advantages like strategic flexibility and cost reduction, but also carries risks such as loss of access to capital and reduced shareholder liquidity. To reverse the trend, the Italian market must address its structural weaknesses to foster a more attractive environment for companies to list and remain on the stock exchange.
Thank you for listening to this episode of Hub Capital. the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T Hub Capital and our activities, visit our website, thubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T Hub Capital team.